The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Hi everyone, Basil Chapman here. Tommy O'Brien's got an appointment, so I'm sitting in for this hour, and I'll do with the next hour, which is my usual show, the Tiger Technicians Hour. So morning market kickoff. What are we looking at? We're looking at the Dow down 77 at 39,463. In my show, I'll discuss this in much greater detail. I have not considered that the changing the sell signal, or at least it is in a sell signal that reverted on a very short-term basis to a buy signal that went to a buy mode because it went to a D. That's a peak D in the YM, which is the Dow futures. That's a peak D in the diamonds, which is at peak D right there at the 395 area and trading right now at 390.46. But the major thrust of what I'm looking at is to say that there's a sideways consolidation, which means on a short-term basis, we still remain short from the exact high on the 20th of May, as it went to a round number, 401.00 in a composite index. I mean, that is really unusual. All right, so let's get back to our story. And our story says, let's go one at a time. I'm going to show you the closing price of the Dow yesterday, having hit 39,571 3 sessions ago. Is that 4 sessions ago? Yes, because that's the closing price. It's pulled back. The 9 is still over the 14. The MACD is good, not strong, but it's good. Stochastic is actually at 80%. The blue line right here, that's the right there. That is the on-balance volume. It's doing very nicely. But what's really impressive to me is the cup formation that went to a second cup formation in the weekly chart. But you can see how within three sessions of the low back in April, the weekly chart of the Dow had these strong candles. These are nothing candles. These are just kind of wishy-washy. And it just says we're in a consolidation phase. And that's really what I want you to impart right now. We're in a consolidation phase. However, look at the strength. Even in the daily, even as it stands right now, look at the strength of this S&P. This is the cash walking the 9-period moving average, that green line, which is way over the 14. To me, this is the indicator of last resort to seek as the other indicators start to fail. This one holds. Holds the longest. It hasn't turned down yet. And if we go to the ES continuous contract right there, you can see walking the 9-period moving average, but it's gone 1, 2, 3, 4. It's gone 5 sessions, including today, basically sideways. So it's a consolidation. When it went 5 sessions from the high that was made back in May, that was quite a bit of a pullback. This is nothing. So it's just using time. And remember, I like to think of the market that unfolds as both a time sequence and a price sequence. You can have price and time, or you can have just price, or you can just have time. It's the combination and timing is the crux of the whole thing. So we've gotten to peak D in the Chapman methodology. That's where other things can happen. Look, there's that peak D right there on the weekly chart on the 23rd, and then it pulled back from 54.33, round number high, to 52.70.25 on the 31st, and then it ran. This one's taken 5 sessions, and it's really gone nowhere. So that's using time. All right, that's important. So within this context, I just wanted to say that the economic report this morning, thanks Flash, we've got breaking U.S. macro data released. GDP Q1 was 1.4% versus 3% estimate. The previous was 3%. So that's quite a difference. So that's the macro data saying that the Fed's wish to have some kind of a slowdown. Actually, the wish should be to have a huge slowdown and yet the market holds very well. That'll confuse everyone because when everything starts to come back, you're coming back from a higher base. My suspicion is that's kind of what we're looking at right now. GDP is one thing, but the PCE, which is the price, oh man, is that the price? Is that the deflator or is that the personal income? I can't remember. Anyway, that was 3.4 versus 3.3, so it's basically the same. And the previous was 1.8%, so that's up. Core PCE, oh, there it is. It's 3.7 versus 3.6. Estimate was previous. That was the estimate, and the previous was 3.6. And the jobless claim 233K versus 236K estimate, and the previous was 238K. So there's the jobless claims are lower, meaning that more people have jobs. Interesting. How's the Fed going to work this? As always, when you look at the statistics, they're always a little bit confusing. Anyway, so let's go back to this. So the E-mini right now is down 3.50. The NQ, which is there we go, NASDAQ. E-mini NASDAQ 100 continuous contract is down 18 at 19,994. Had an all-time high just 6 sessions ago. That was on the 20th of June at 20,371. Now this gets smoothed out, but that's the price I've got right now, and that's a doji candle in the weekly chart. And look at these weekly charts. All these weekly charts are still so strong. I just want you to go, since this is live, I want to go right now to the E-mini to show you something interesting. So you remember peak Ds, what I say is where other things can happen. Well, lo and behold, the 1 minute E-mini went to a peak D, uppercase on the way up, lowercase on the way down, and it's just crossed negative. Is this where I would actually put on a short or sell the E-mini? Yeah, well, and there was that huge spike to the upside with the economic report at 8:30, but that can fail. This is the one time where the technicals are such that if there's a single leg up, in this case it's kind of two legs up, and that fails at 8:30 with an economic report, that's where you don't have to go to a D to fail. And I'm watching this very closely because I think that this is going to be a tough session in the sense that it keeps looking like things are great, and then it doesn't act all that well. And then it suddenly pops to the upside for some reason, and then it gives back. So this is going to be, I call this dartfish day, where there's sudden quick movements that you think, oh, this is it. And then it stops dead and then changes course. And then stops dead and then changes course. And that's going to be dartfish day. Now, I looked it up once. I always thought the dartfish was actually a fish. But when you look it up, let me just go right now. Dartfish day. I think I made it up. It's one of those things that you say so many times that after a while you believe it. Dartfish with a question mark. Characterized by their, dartfish, marine fish. Characterized by their bright colors and elongated bodies, dartfish. I thought they was make a great addition to a peaceful saltwater community or reef. That's exactly the opposite of what I would expect. Dartfish is the leader in sports performance technology. Dartfish that's video analysis. Oh, there is a little fish. Let me just move this over right here. Tommy likes to show these things. There's the dartfish. Come on, move quickly and then stop. Move quickly and then stop. All right, I'll be back in a moment. Basil Chapman sitting in for Tommy O'Brien. The Dow futures down 101. S&P futures are down 3.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Maybe it's the zebra dartfish, the barred dartfish. Okay, I'm calling this Dartfish Day. I will call it Dartfish action for years when I see markets that are just kind of static, and then suddenly they move, and then suddenly they stop. Look around, nothing. Then they move and stop. And that's what I'm thinking we got today. All right, so with that said, what's really important, I'll just give you numbers. We'll do it now before the market actually opens. In the E-mini, the 200-period moving average in the 10-minute chart, which has been between 5530 and 5534, it's at 5532 right now because it's moving up, has been really important. You've been up and down and below. It's used it as a springboard, and this morning it came all the way back down to that level and then just sprung to the upside. Now it's faltering, and that faltering, it says the 9-period moving average in the 10-minute chart of the E-mini is still positive, very positive. It's positive in the green. It's green in the 5-minute chart. That's already gone to leg C. So all that's missing is a leg D to get you to a buy signal to buy mode, which usually takes you to a D. And in the 1-minute chart, we've already gotten to the D and we've pulled back. That was the starting point over there, right there at 8:30. Bing, spike. Actually pulled back quite sharply. It doesn't look like that now, but if you were in this at the time looking at it, they're saying, whoo. Okay, so with that said, let's get to our story, because what's very important, what we're looking at here is the NQ is holding quite nicely, but it has had in time and price the kind of move that it had back in May. Not so much, it's a slightly less number in the decline, but it has that same kind of pullback, and the 9-period moving average held, and that became a huge springboard for the move to the upside. So now what I need to do is to show you something very interesting. So first I'll go to the RTY, which is the Russell 2000. You see this 200-period moving average in the 1-minute chart, in the daily chart on the left? Look how important it is. And now, this is the question I have. Are we looking at the rotation saying there's a chance that over the next couple of weeks, maybe a week or two going to say mid-June, we're looking at some kind of basing action, because the weekly chart has this arch formation, double arch formation in the weekly chart, but only the last from last Friday to today has it gone pink, but yet the price has held very well. So it's really important in this next phase, I call it the next phase, going into the summer itself, July that is, that the small caps, the Russell 2000, let me show you this just to emphasize what I'm talking about. Here's the IWB. This is the Russell 1000 ETF. Now, it's a different category altogether. You can see by the price, because this went to an all-time high just 5 sessions ago, leg E. In the weekly chart, this could even be an instant restart that says, this could be an E/A, and that means you can go all the way to a D in 2024. We'll see what happens there. But in the weekly chart, all the technicals are strong, but the MACD has pulled back quite a bit. It's still positive. Stochastic's holding at 93%. Nothing wrong here. Look at the daily chart, holding the 9-period moving average. So even here, this is the Russell, but it's the Russell 1000. Very different to the Russell 2000. But wait a minute. Here's the Russell microcaps. Is it the Russell? No, it's the iShares, the microcap ETF. That's even worse than the Russell. Look how it keeps going down, down, down. This might have more to do with rates, or to do with the areas that the microcaps are in. But look, testing the 200-period moving average for the last year, over a year. Is that right? Over a year? No, for the last 6 months, 7 months. And it's testing it with an H pattern that goes to a lowercase m. So these are the microcaps. And that's why I'm saying, let me go through this again. The Dow at this particular point is acting quite weak in terms of where it's been, and it's been in a longer consolidation. It has had a turnaround to the upside, and that's stalled. But the weekly chart is still pretty good. Let's go to the XLK, because that's going to be very important over the next week and a half. Why? Because it has the semiconductors in it. And if you're looking at the XLK Select Tech Spider Fund, look at this huge leg D with all the technicals strong in the monthly chart. Weekly chart, same thing. It's a brand new leg G/B. Everything looks like it's a B. All the technicals are good. And if you're looking at the daily, yes, there's been a pullback, but that 9-period moving average is still way over the 14. So it's a work in progress. It hasn't yet, until it starts to close at the 218 level. It's the 225.87, down 37. Here's the real story. The SMHs down just 11 cents today, even after Micron. I mean, let's face it, Micron down 7 at 136.33. You remember peak D? Well, it made a peak D back in May in the daily chart. Had just a couple of days of consolidation, had an instant restart actually. They went to another peak D. That could have been an instant restart, except it pulled back sharply after that D, and now it's just made another D at 157.57. I just need to explain this briefly now, because people are listening. D, ABC, what is this guy? Are we at school? Let me just do this right here. I think this is a better one. Oh, I don't even have it anymore, do I? Yes, okay. So here is what we're looking at. This is a notation. You identify the lowest low bar, count each successively higher peak, alphabetize them sequentially, A, B, C, D, E, F, G to the upside with an uppercase on the upside, lowercase is on the downside. At that fourth highest peak, peak D, other things can happen. That's where you can have your sharpest decline. That's where you can have an instant restart and continue to yet another A, B, C, D. We just saw that right over there. Or you can stall at a peak G. All right, with that said, where are we? We're in G/C in the weekly chart of Micron, and a leg C in the monthly chart, and that just says in 2024, you should get to a leg D. All right, but if you look at the others, LRCX, all-time high, 6 sessions ago in the 1100 area, pulled back a little bit, trading right now at 1069, up 13. Peak C in the weekly, that says it should still go higher. The E, Lam Research, NVD, NVIDIA trading right now down $1.58 at 124.81. Taking a bit of a breather after hitting 140.76. It was 1,407 that was split. That was split 10, or was it 20? Whatever it is. So it's split. In the meantime, back at the ranch, peak D in the weekly. If there's no new high this week, we've got 2 days to go, and leg D in the monthly chart, and that's NVIDIA, one of the strongest of the semis. Advanced micro devices, peak D in the monthly, peak C. Another way I can count it in the weekly, that could fail if there's another peak A, B. Well, that's what's happening right now. A in the weekly chart, a gray A, gray B, because it's underneath the previous C of 227.30. But it was a peak D in the daily, and it's down 79 cents at 156.75. So I'm trying to show you that there is a stalling formation in the semiconductor area after being absolutely the leaders. And that says, do we rotate now? What are we going to do? We'll come back to the opening of the market soon. Basil Chapman sitting for Tommy O'Brien. I'll be right back.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry Pesavento on Friday, June 14th and Friday, June 28th this month for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryJune24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks. We're back. Basil Chapman sitting in for Tommy O'Brien. We're looking at the Dow opening. It's down. Let me just do this over here. So let me just move this over. There it is. Okay. So the Dow is down 41, I think. Yes. Now it's 49, 50 points. It's kind of stalling here. It's having a tough time, but it hasn't broken down. It's just stuck. The weekly chart is just in this cup formation, second part of the cup formation, but stalling at an important level that really should show a quick move up to the 39,700. Hasn't done that yet. We're looking at and I think that today we got what I call dartfish day, sudden moves to the upside, and then they just kind of stall, and a sudden move to the downside, and then a stall. It's just, it's a very mixed market. If I look at the S&P, look at this. S&P right now is down just $1.10 at 5476.80, holding very steady here. Usually you don't get major sell-offs from this. You get maybe one spike and then you could do it, but it's in the process. At this point, the day has barely begun, so I can't even talk about it as if the day is even halfway through. But some of us, it actually is up at 3.5. Yeah, it's halfway through. Yes, we'll see what happens here, because it has been making lower lows and lower highs, but that's just in a very narrow confined area. The 9 is still over the 14. The price is over the 9. Nothing here that's negative. It will be negative if there is a sudden slide, and we'll see, because we're in the process now of testing the end of June. The candle, you can see the end of June, the candle, there's this very long-term inside track repellent zone that it's just touched the pink line that's underneath, like a 16th or maybe 3/16 of an. I always put this in this up channel, little mini up channel, either up or down, to say that's your repellent zone. And if it breaks out above it and goes into the 55-25 area, that's going to be fantastic. But actually, on a monthly basis, it would have to close either in June. It'll have to go into the 5630s to really do anything with this monthly chart to break out. But it's making higher highs and higher lows, and all the technicals are good. Weekly chart, very strong. Daily chart still very strong. Now, what's really important, you see this blue line here? This is the on-balance volume. That is getting to be a little bit overbought. That's the weekly chart. And the stochastic is flat at 93%. And one of the things that I always mention is that when this flat stochastic eventually breaks from the 90% plus area, goes under 80%, that's where you can get your sharpest pullback. And in time and price, this wasn't so much in time. It was a little bit in price. But look, that 9-period moving average held. So this is important. So I'm anticipating that these attempts, we're waiting for a decent rally today to be able to change, to add to some of the positions, but we'll see what happens. Most importantly, there's your leg C in the 10-minute chart of the E-mini. There's your leg D in the 5-minute chart, and this is your leg A. Let me double check. Looks to me like this is, I'm using this as a phantom peak right here, so I often do that, and that's your B. Now we're up $1.25 in the E-mini. That's what I was saying. That's what I said to subscribers. There's still residual strength. So I had a couple of questions. Let me get to the questions immediately. So the first question I had was, could I look at XLE? Now, this is the energy sector, and it's kind of been, it's been in a down mode since it ran up to the 100 and, was that? No, it was 90, I think it was 98. Yeah, 98.97 the week of the 12th of April. Well, it's come all the way down to the 87 area. So now it's running a little bit. This is a pattern that is one of my favorite patterns, but it's a very difficult pattern to trade because I'll show you why. So you come down in a very steady down channel. There's your upper boundary line right here. This is XLE, is the SM right there. S&P Select Energy Spider Fund. And here we go, 1 touch, 2 touch, and that's it. And what I like to do is, if it's possible, without making that expanding wedge formation, see first if I can get a parallel line. Well, I can. From that line, look, there it is. 3 times hit, so you've got perfect parallel line. What happens in this move, usually it's much narrower. That is, this is a fairly broad channel to the downside. But what's written, I'm looking at this and I'm saying, oh, did I miss something that I could have done earlier on? Right there. Now you've got I'm calling this a B. and here's your leg D. This is not dartfish day because it has the moves are actually bigger than the dartfish. Usually it looks like it's going to rally. This is a big move. This is now up 2.75. This is the E mini. The low was down. Where did I put this so that I could see the lows at the same time? Gosh, nice buying. At 15.75. And we're now we're 30 points higher than that. That's impressive. That's very good. Look at that nice move to the upside. Okay, within context of what we're looking at here, what I was saying is that this is a very important move. Now, what happens is normally it's narrower, but when it's this big, it does pretty much the same thing. It suddenly triggers a buy signal. And the buy signal comes from a shorter time frame. In this case, it'll be from the daily. And if the daily is able to suddenly spike to the 92 level, you see 92 gets it out of the channel resistance, Chapman inside track repellent zone, and that's going to be important. But you see how much work has to be done in the weekly chart to get the MACD to actually the histogram to start turning positive. See how much work has to be done in the monthly chart to sustain the move, because the stochastics at 77%, not 80 or more. The unbalanced volume is pulling back. The MACD is still negative. So there's a bit of work to be done, but it's still holding pretty well. So I like it in terms of saying I see a residual strength, but I need to see a fluster and a cluster of buy pumps to the upside. In other words, you can't just have a little spike that takes it to the high of yesterday or a few days ago in the 91.50 to 91.60 area. It really has to get to the 92s. And if it gets to the 92s and the stochastic at 81% goes to 83% and the MACD starts to improve and the histogram improves even more, and then look, right now the 9-period moving average has flipped to the positive side, but the day's young. You have to wait for it's a daily chart. So you have to wait for the day to close at 4 o'clock. So what I'm going to say to you is, I don't know if you're in it. Oh, you are along just underneath. Okay, I was going to say to you, I would actually start the position here because your risk is very slight. Your risk is probably more time than price, because this kind of move, you see, when it does a quick move to the upside, it gives it back. When it has a steady move to the upside, then it rolls over. And that'll be your clue to you that if it takes out the low of yesterday, which was 90.10, I'd say just be real careful. I'd take a little bit off of any position that you start. But I'd start the position right here, and there are 3 reasons why. Number one is this weekly chart has the potential to have this move that says if it breaks out, it quickly goes to the previous peak. Well, there is no peak until you get all the way to the 24th of May of 95.21. So I just go one step at a time. I'd say this candle high of the 7th of June of 92.92 is your first resistance. So you know where your support is. I like it. I'm just saying it should be a work in progress. It's had a pretty decent multi-week pullback, and the monthly chart is still holding very well at peak C, and it should go to a D.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the fund involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So we're looking at this, all the technicals are so far very good in the very short term and the near term of the E-minis. So here we go. So I had a question, where did it go? Here. Yeah, let me just show you something very interesting. Race, that's the Ferrari. Ferrari made an all-time high just recently at the 440 level. I can't remember if that was 442.80. 442.80. It's trading at 411. That's it's almost an 8% or so pullback. But what's really important is that I follow Ferrari because Ferrari, now things might have changed because of EVs, etc. I mean, I'm looking at just recently in one day I saw all these sports cars going by. Just that's what happens when you're on the road. If you're looking at cars. And they had these, the twin exhausts and all that. And I'm saying, why would somebody be buying a 180,000, whatever it is, Porsche or Maserati or something, when in fact, and not going electric? And the whole thing is that people are not that happy with, they love the drive and everything with electric. But electric has some, in the summertime, the air conditioning, all these things use up energy. In the wintertime, the heating uses. So there are other things going on until they get equilibrium, until the electric vehicles produce almost everything that the gas does. And that's going to take a long time. I can see why people still do that. But meantime, back in the ranch, Ferrari very often, I haven't got the chart in front of me, but I've charted over the years. And some of the major tops in the market do coincide with Ferrari, but that wasn't the point I wanted to make. I wanted to just, I had a question about it, and is Ferrari, the question was, is Ferrari showing you anything in your whole coda phase? And all it's saying is, yes, it's up in the highs and it's taking a digestive phase, and that's really important. If it starts to trade in the 450 to new all-time highs in the 450 area, you should be seeing the market go higher. That's really what I wanted to say there. Now let me go back. I've got the notes here for Thursday. Here we go. Oh, PKG, packaging. There we go. This is PKG's Packaging Corp of America. So here's another one of those things I look at. I look at URI, which is the rental company. I look at CTS, which is the looking at the overall uniform rentals. How does that work? That went to all-time highs just recently. But look at this pullback today, down 547. I didn't even know that. So I done this work a while back. I forgot about it I did a left side, right side price time match because someone had asked me about it. I forgot that it had a 169 round number low on the 23rd of April. So it screamed, where does it go to? I haven't even updated this. The previous high of April the 9th was 191.27. What was the high 4 days ago? 191.39. I mean, 12 cents higher, right? And now what are we looking at? We're looking at it down at 180. And I drawn all this in. I forgot about Chapman wave inside wedge, target, resistance line, left side, right side, price, time match, that bar symmetry. And lo and behold, it got there a little quicker than I thought. I completely forgot about it. I updated it 2 days ago. Was going to talk about it, forgot about it. And then I got a notice, what's going on with Packaging Corporation of America. So, I didn't realize that maybe earnings came out last night and now it's down 2.5%. Talk about down, so MU has to come back a little bit. Micron, it's come back quite a bit. It's down 5. It was down, I think it went to 133.91. So it's 3 points higher than the low of the day. But it is making lower lows and lower highs. And it just says to me, the SMA just should be doing some kind of a digestive phase right here. They're trading at 261.97. All right, I should mention that we did start a short position just off the top, and we'll see if that's going to hold. Most importantly, okay, so the next thing I had here, RSP. I completely forgot. I had a question a couple of days ago and just completely forgot because I forgot the symbol. RSP is the S&P equal weight ETF. It made a high, an all-time high of 169.80 back in May, and it's just been digesting gains. Gone sideways, got the lowercase h that goes to a lowercase m. This is the pattern that we call the dreaded h, but this is not a dreaded h yet because all it's doing is repeating the arch. So it's gone from straight down to this. So patterns, 3 patterns: straight up, straight down, cup formation, arch formation, mix of 1 and 2 or 1 and 3. In this case, 1 and 3, where it comes down, it makes an arch, and then it tests the left side low, and then makes another arch, goes above the previous high, and then fails. And now you're looking at it coming down again. So this just says to me that this particular pattern, the pattern that we're looking at, having made a peak D in the S&P 500 equal weight, it made a peak C all-time high at 164.49 back in January of 2022, and then plummets down to the 125 area, and now it's come all the way back, and now it's come back to a D. So D is your objective, and that's where other things can happen, and now it's digesting the gains. So the equal weight is telling me that the S&P is already it's been undergoing for over a month now a sideways consolidation. That's important. Why? Because if you put it together with the SPY, which only just 6 sessions ago made its high at 550.12 and is really consolidating in a very mini way, just a high-level consolidation at this point, you have to be impressed. All right. So that's with, okay, that's the next question. Oh, who just said that? Okay. So questions have come in about Apple. Let me just do that. So Apple made a peak C1, C2, a double top high in the 220 area, and it's trading at 214.20, walking the 9-period moving average. I'm suspecting that this is going to, over a period of a week or two, we could see a break into the 206 level. Unless, and this is going to be really important, by Monday, it has to be by Monday. It has to be the first of them. Yeah, it has to be in July. If that candle pushes above 220 point, what did I say it was? 220.29? 220.20? Wait a minute. Yeah, 220.20. Yeah, that's 220.20. If it goes even 1 penny above that, that starts leg C in the weekly chart. It means that in this phase in July, you're going to get higher highs. So this is a really important phase. So that's Apple, close to all-time highs. Meta, mentioned in the Tiger YouTube, Metalicious, very good. All-time high was 530.70. That was back in May. Pulls back quite sharply to the 4 14.50 low with a 421 round number open on the 25th of April, and that was it. So the brand new move to the upside. Here it is in leg D. Remember, D is the one that we're always looking for, at least a D, and you've got to a D at an all-time high, 521.70. Sorry, under the all-time high of 5. Now it's at 521.79. It should try to test 530.70. It's leg B. If it goes to 530.71 anytime in July, that starts leg C in the monthly chart. I'll be back. The Dow's only down 6 and the S&P's up 3. We'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
I'm just writing down something to look at here. All right, so we were looking at Meta. Meta's in leg D. It just hit the Chapman wave inside wedge target repellent line at 521.79. Let's see how much it can go. It could retest the high of 531.49, but I think it might need more time. It might need another week, but this is going to be very important. Remember, in the big rectangle formation, I've done webinars on this. What we look at is right here. Is there going to be a move that goes to higher highs and higher lows in a lopsided kind of gravy cup pattern that takes you back to the previous high, in this case 530.70, and does it go peak A, peak B, and C, and even a D that goes just under, right on, or just above the previous high, and then you've got to be very careful. And this is exactly where we are. We're at leg C in the rectangle formation. This says that over a period of a week or two, you could even have a sideways move, but there should be a higher high. The 530.70 level should be hit either in July or August. That's the way it looks right now. And it's only in leg B, a peak B in the weekly chart at 530.71. That'll start leg C, and it's got major support between 506 and 500 right now. Okay, question came in about, could I look at Qualcomm? Anyone remember that tower in 2000? Everyone was talking about Qualcomm. 230.63 was the all-time high. On the 18th of June, it hit 228 round number. It had a 228 round number low. Wow, talk about round numbers. I'll go to that in a moment. We're looking at a peak D doji candle with an island reversal. And what did Dana say? He said, hello, Basil, can you give your thoughts on Qualcomm owned the July 19? So it's Friday. How many? July 19. So that'll be including tomorrow. That'll be 1, 2, 3. Yeah, it goes all the way to the 19th. You've got quite a few weeks in which to see that. Can it hit? Whoa, 182. It's trading 197. Oh, you're a little aggressive there, Dana. Can it? No, I'll tell you what I would look at. You see this little doji candle right here? Little doji candle. Yeah, I'll give you what I'm looking at. 191 is really your first key support level. It's 197. I'd go one step at a time. And it's over 3 weeks.